Everybody needs an insurance. So we have 10,000 death claims every year of either unfortunately the customer or their spouse.
Even many of the middle class people don't have their credit score.
So each small finance bank will have a their own core geography.
Creating a commercially viable, profitable model with 75% priority sector.
So we have a panel of MD and CEOs of small finance banks, and the topic of discussion is, can they go big? There is a small story behind it. Let me tell you the story in a short time. In the last 25 years, India has seen only 4 universal banks. In quarter of a century, only 4 universal banks. Universal banks are the ICICI and HDFC banks of the world. In last 10 years, there was no universal banks that was set up. Banking in India, the regulations are pretty strict. There are high entry barriers. In this context, there are 10 small finance banks who were licensed 10 years back. And in the last 10 years, there are 2 more added. So there are total 11 small finance banks now, with one of the small finance banks merging with other one. In this backdrop, that there are only 4 universal banks came in the last 25 years, RBI few months back has offered a glide path to small finance bank to convert voluntarily into universal banks. So the opportunity is huge for them. That's why we are asking, can they become big? So these banks are essentially on the doorstep of becoming big once they convert themselves as a universal banks. But let me start with asking the most fundamental question. Is there an opportunity? What is the benefits of becoming an universal banks from a small finance bank? Can we start with Mr. Thomas, please?
Thank you, Manoj. Yes, I think we already have become big small finance banks. So I think when the licenses were given, then Governor, RBI Governor Dr. Raghuram Rajan said these banks are big banks for small people. So I think if you look last 7 years growth of all the small finance bank, it was we've all grown exceeding the growth rate of all other commercial banks. So your question is, what is the benefit of becoming universal bank? So one major benefit is that public perception will get changed. Otherwise, we can do everything. We have, ISAF Small Finance Bank last year got the AD1 license also. So we can do everything a universal bank does. So the main thing is that the word small finance will go away. So we will be treated equal to universal banks. So one major thing is the public perception will get changed. The number 2 is definitely there is a capital requirement for a small finance bank. The minimum capital adequacy is 15%. For universal banks is less. So that benefit is there. So otherwise, I am not seeing any big benefit. So but then the perception for the employees, for the stakeholders, the entire perception will get changed.
So, Mr. Singh, how important is this perception change that that this word small associated with you is no longer there? How important that is?
The way Paul mentioned, I think it's important, to understand that we are actually big banks for small people. And if you look from the balance sheet size, so we may be looking at numbers only, but if you look at the number of clients, number of employees, the network of branches, in fact, many of the small finance banks may be bigger than many of the universal banks. Actually, what happens when you talk universal bank, I look at State Bank of India, ICICI Bank, HDFC only. There are many other universal banks also which are smaller than actually small finance banks. So that's also a reality.
That's an important point, yeah.
Yeah. This perception is certainly important, especially, when we go to newer geography. So each small finance bank will have a their own core geography. So for example, we come from Varanasi, so for UP, Bihar, that area is my core geography. Everyone understands that we are there for last 15, 16 years. But when I go to new geography, I go to Kerala, sometimes it becomes difficult, to explain people what is a small finance bank. They might ask whether you are still a cooperative bank. So that certainly gets addressed. If you are able to get this, somehow get, small removed from the name, either through regulations or by becoming universal bank, that is going to certainly help us. But otherwise, I think we are, in terms of impact, in terms of overall footprints, network, I think we are big, and we can do all type of activities what a normal banks can do.
Right. So, Mr. Kanwal, according to you, what are the benefits?
So first I must add to what both my colleagues said. See, one is big doesn't just mean size. And like you rightly heard, it's bigger than a lot of universal banks in terms of size. But also if you look at digital as an answer, look at the processes. I mean, and imagine 75% priority sector and yet profitable model. So you look at the capital adequacies, you look at the ROAs, ROEs. So I think one is size, two is modernity, third is creating a commercially viable, profitable model with 75% priority sector. I think SFBs have created that model for sure.
Right.
I also agree with Paul, which is we don't have to become big. We're already growing pretty fast. And yeah, as you know, growing too fast may have its own risk. So we rather grow at a measured pace. I think one big advantage, which is direct advantage, is we do have what I think is a small finance bank risk premium because it is seen as a riskier organization versus universal banks. And I think we all tend to pay anything between 25 to 50 basis points extra on our deposits.
Right.
So I think both the pace of deposit growth, the cost of deposits will come down when the small finance tag changes, which will be directly measurable. Capital adequacy will fall, but do we need capital adequacy much lower? That is not really bothering us today.
Correct, correct.
Priority sector will go below 75 to 40, but is that what we need? Not really as much. Will the employees feel happy? Yes. Investors feel happy? Yes. And cost of deposit will go down. I think those will be the right answers. I think on a macro picture, SFBs becoming universal will encourage a lot of other NBFCs, I suspect, to apply for SFBs.
That's
which
an
will be the
interesting
normal
thing.
glide path.
No, that's an interesting thing because even if the universal banking license is on tap, no one has applied for, no serious player has applied for a universal banks. Anyway, please continue.
So I just want to make sure, I have to say these things because to become big, you don't have to become universal. Small finance will anyway grow well, whether they become universal or not, and they've been growing in the last 6 years in spite of all the rest of the challenges. But I do think that if we do get opportunity, we would like to go there, just to take away the cost of fund, to take away this 20 minutes of, even today you're having a separate session for us, right? And which is showing there is, I won't say discrimination, but certainly a distinction. I think that will follow, it will help all of us.
Great, great. No, one interesting point you said that your deposit, you offer a risk premium, higher deposit rate. Some of the universal banks also offer higher deposit rates, savings account deposit rates, isn't it? So, Mr. Babu, do you think there is a significant, I mean, I think all of the small finance bank offer a higher deposit rate, savings account deposit rate because they started only 10 years back and they needed deposits. Do you think becoming a universal bank will have a significant impact on your cost of funds?
Yes, Manojit, it may have, I would say, but not necessarily. What has happened is that each one of us in our own regions have created a niche and a name for small finance bank. If I have to enter Kerala, like Owen said, if you have to enter Kerala, all you have to do is that, no, small finance bank, what is a small finance bank? We are like ISAF. And that, I think, each one has done regionally done that. Equitas has done it in Tamil Nadu, Paul has done, ISAF has done it in Kerala, Ajay would have done it in Karnataka. So I think that's getting kind of solved. Even if our name tag changes to Suryodaya Bank Limited, doesn't really mean that I suddenly drop my pricing by 25 basis points and the deposit will continue to do so. So that will come out of size. And today, if you look at the SFB space, the smallest one is 2,500 crores in terms of loan size. The largest one is 97,000 crores. So that, I think, is a spectrum that we are really kind of playing. What it will certainly help is in terms of probably for some of the things we are excluded, like say co-lending. So we will be then, as Ajay said, we will not have a 20-minute session and we will be treated on par with other things for all the products. That's it. But other than that, there is not specific any advantage. It is initially all of us want to become and apply, but I am very clear that I would not even give it a shot for the next 3 years.
You will not give it a shot for the next 3 years. That is the next thing I wanted to ask. Are you all ready to become the the universal bank, what is the level of preparedness, Mr. Thomas? What is the level of preparedness? When do you think you can become ready?
Okay, okay, I got it. So we are not in a hurry to become universal bank. So because we are more impact focused institution. So ISAF, we started as an NGO. We really wanted to make impact in the communities. So I'm able to make an impact in the society as a small finance bank. So our regulatory requirement for priority sector advances is 75%. My priority sector advance is 92%. So I'm able to mobilize deposits. My retail deposits are 92% of the deposits are retail. So I'm able to attract NRI deposit. I'm able to attract FCNR deposits. So whatever I can do as a universal bank, I'm able to do. And we have tried to convince, as we have, all my other colleagues have said, individual markets we have played and we have convinced that we are a differentiated bank, but we are a scheduled commercial bank,
Correct.
like any other bank. So I'm not in a hurry.
Right, but RBI has also prescribed certain criteria to become a universal bank. Most of the criteria are met by 10 SFBs, 9 SFBs. But on the net NPA and gross NPA criteria, which said that 3% of gross NPA for 2 consecutive years and 1% of net NPA or less for 2 consecutive years. On that perspective, when do you think ISAF will be eligible?
Okay, on that front, ISAF will be eligible. I have to wait few quarters, 1 or 2 years, definitely.
Couple of years. Mr. Govind Singh, so can you tell us how Utkarsh is gearing up for this big transition?
No, as I think others also mentioned, again, we are not in a hurry. In fact, for us, the bigger work right now is the reverse merger of our holding company.
Right.
In fact, the process is on right now and normally takes around a year or so. Our plans are to, once the reverse merger process is completely over, then we'll look at the next step for universal bank, at what stage we are there. But I want to tell one more thing. What you are talking, and that's very useful that RBI has come with very clear-cut guidelines. If you do meet ABC, then you become eligible for universal bank. That is very, very useful. In fact, we have been talking with RBI and they have come with guidelines. But as I mentioned, it is not going to make much difference. We are not an universal bank, and so we'll not be in a hurry to become universal bank. So that's also equally important from our side.
Right, right. Mr. Carnival, your colleagues are not in a hurry. Are you in a hurry?
I am going to balance them. I am in a hurry. But listen, I mean, frankly, if somebody would drop the name small finance today, I will take it.
Right.
So that is my simplest position. Because to me, whether I have a 90% plus priority sector lending, that won't change.
90%?
Yeah, we are 90% plus in priority sector. To
Correct.
me, becoming universal doesn't stop me from doing priority sector.
Correct.
What it does is it gives employees, investors, depositors a better feeling that they are not going to a differentiated bank.
Correct.
So I would want that today if I get it. Of course I will. Where am I on the glide path? I have one criteria to meet, which is net NPA has to be less than 1% for 2 years. I met that last year. I am trying my best to meet it this year. If I'm able to meet it, I will certainly like to put up my proposal to the regulator next year.
Wonderful.
So that is second.
Yeah.
But third very important question, are we prepared? So I think that I have to clarify. See, listen, we are a scheduled commercial bank and all policies, regulation, LCR, anything you name has been applied on small finance banks since our inception. There is nothing new we have to do to become universal.
Correct.
We have all the systems from a cyber security to a CBS to whatever else is required to be a universal bank. I don't have to spend extra money to be a universal bank or come with an extra process or anything else. I will have only one cost, that is to change the branding. Other than
Wonderful.
that, there is no difference today. And that is very important because scheduled commercial banks have largely the same policies, except that in our case, scheduled commercial bank is slightly more tighter policies. That's about it.
Mr. Babu, what is your views on the issue about the preparedness of small finance banks?
One thing we have not been discriminated at all against is that the regulations are the same as it is for universal banks.
Right.
So initially it was such a problem. We said that no, we are so small, we're just starting. Why do we have to do the same investment? Rightly, wrongly. Now currently we are all compliant as Ajay mentioned. So to that extent, from the preparedness point of view, It is just as I said that the cost of changing the signages and branding and all of that. Other than that, I think most of us are on the same platform as far as universal banks are concerned in terms of all other things on regulation. So I don't think there is any big cost impact.
But are you in a hurry or you are waiting what mode?
There is nothing that a small finance bank cannot do, which a universal bank can do, except in terms of forex and so some of those things where they are treated for co-lending. So we can continue to become large, and as I said, that the 2,500 crore SFB can go all the way till around closer to 1 lakh crores before they even think about it. So there are no constraints. If there were a universal bank, whatever we said, 90% of PSL which we have, 40% requirement, remaining I'll be able to encash as PSLC. So today we leave that money on the table, which would be probably around closer to 0.5% ROE and 2-3% in terms of ROE. Rest of it, I think it gives us a nimbleness. I open branches with 400 square feet, not really constrained. So whatever a regular bank will do it probably with a little more flexibility and nimbleness. So I actually don't see any constraints except, as Ajay says, it's a feel good for employees, for investors, it will be treated. That's it. I think it's more
Right.
procedure.
While the RBI, the norms which was announced April, makes it very clear what are the criterias that one can be allowed to be converted to a universal bank. But there is one ambiguity on one particular aspect. They said that the diversification, the bank which are more diversified will be preferred. Of course, there are most small finance banks were in earlier avatar a microfinance institution. So they have a higher proportion of MFI loans, unsecured loans, higher percentage of. Do you have any sense what could be a good mix of secured and unsecured that can satisfy the regulator, that can pass the regulator's muster?
I think every bank, even whether it is universal or small finance banks, have a legacy. So, there is a concentration, and it takes time for proper diversification. So, if we, all of us sitting in this, we were microfinance institutions. So, when we started in 2017, it was 100% microfinance, the asset. So, every year-on-year basis, we have diversified, and for in ISAF case, so we are at 60% microfinance now. And we are still continuing the diversification, and we are building our asset in gold loan, MSME, agri, mortgage. All these books are growing. So there is it's individual bank's decision. So what is the percentage of assets in each category where we have to keep. So there is no advisory on specific percentage on each category, but it depends on the geography they operate. And depends on the priorities and the capabilities of the bank, which decides. So I think we are reducing our microfinance every year 5 to 6%. So that is happening, and we are building other books.
Mr. Singh, do you have a sense on how much diversification should be there in order to satisfy the regulator?
So to me also, I don't have any specific number in mind, whether it is 50%, 40%, I don't even have the number. But I think the way RBI looks at it, the trajectory or the direction actually. If you are able to show 5, 6, 7% decline in the core product what we are doing, and because for the basic difference between NBFC and bank will be the NBFC will have one large product, sometime it will be 90%, 95%. Okay. Banks is supposed to be a much more granular and diversified book. So if RBI sees that it is diversified, it is happening on a regular basis, the trajectory is there, direction is there, I think they will be more than comfortable. But as I mentioned, I don't have any exact number, what is the number in mind. But my sense is again, the trajectory will be more important from the regulatory angle also.
But lowering the MFI portfolio also means sacrificing margin. That's a high margin business. So Mr. Kanwal, according to you, what's an ideal mix?
So Manojit, I did not know this criteria will come in the universal bank because there was no criteria in the past. But when we began the bank in 2018, from that day onwards, we are doing two diversifications. One is asset diversification, and second is geographic diversification. And today, as we sit here, September results have been announced. We are 65% non-microfinance. and also secured in nature, because you can be also non-microfinance, but you can be still unsecured. also.
Unsecured, right. Like
So I
personal
think
loans, yeah.
also depends on how much is secured. We are 65% there, and we have no geographic concentration beyond 12% in any state.
Okay.
So I think we don't and we did not do this from a universal perspective. We built that in a model from 2018, saying, listen, as a bank, it's good to be prudent. Let's turn more and more secured. Let's be geographically less concentrated. And that path has been non-stop for us, which is why we are at 65% secured, and we were at 60 in March, we are 65 in September. So for us, I do think that, I don't know, like both my colleagues said, there is no definitive number. It could very well be a direction. But for us, we have been on that path for so long. I think we should sustain that and carry on as it is. I think we should be fine.
So, Mr. Babu, is that the dichotomy that on one hand you are required to diversify, on the other hand you have to give up on your margins? How do you see this?
Actually, more than this, what I think is a model which SFBs have not served, or specifically if I have to take out Surya where we have failed, is that when we all applied, we presume that our asset customers will also start saving, and it will kind of give us a good stickiness, and it is so beautiful to have customers saving with you, borrowing from you, understand the whole thing, which some of the large banks have beautifully done, is that liability customers becoming asset, we have full oversight of it. Today, rightly wrong, I think it has just happened, either by design as well as by the way in which probably the cost of mobilization is high. Our asset customers are extremely different from liability customers. The overlap is very, very minimal. So again, all financial inclusion by various discussions tends to really go back in terms of lending. Lending is only 40% of financial inclusion. I think the majority 60 is in terms of everybody needs an insurance. So we have 10,000 death claims every year of either unfortunately the customer or the spouse. In every case, we just check with them whether they have a PMJJY. We can really enable them to do it. The answer is that very close to zero. So I don't know who has taken, probably me, Manojit and Tamal and all of the people who have taken PMJJY. And either they have taken, or they have taken and they have forgotten that they have taken, or they are not informed the family. So that circle of financial inclusion is a large pace which is missing. Whichever SFB is able to do that very meaningfully, I won't even crave to become a universal bank quickly. I think the first unfinished agenda for which all of us became SFBs was to do financial inclusion in a real, true, combined manner, which by itself then will reduce the risk substantially. That piece is not what's really happening, and that from that point of view, if regulator can really give some dispensation, some encouragement, anything which will really make this small, because mobilizing small savings is extremely expensive. It will be closer to around normal cost of mobilization of deposit for all of us. Here is around 200 basis points or more. If I get granular, it will be 500, 600 basis points. So that balancing when it happens, the guy who saves generally also is very cautious about in terms of how much they borrow. The problem or microfinance, whatever you're talking about over borrowing, is also to do with that they are not even saving enough, or they're saving in various other things which is not necessarily formal. So for me, I think that is the biggest challenge than the tick the box in terms of GNPA and NPA, because true financial inclusion for which SFBs came, and whichever SFB will do that will really, really be large, meaningful, impactful. So that I think is what really kind of we should really look at before even aspire to become that. So all diversifications we are talking about in terms of assets, microfinance, secured, unsecured, the biggest model crack which has to be fixed is in terms of true financial inclusion as a platform.
But financial inclusion has to be profitable, isn't it?
Exactly. So that's a challenge. That's why now we have an asset pool which is very different, a liability pool which is very different.
Right.
So Manojit is my as a liability customer, so is many of you here, but the asset customer is very, very different.
Correct.
Though we have diversified, and say Ajay has got a large diversified pool, so which is mortgages or vehicles or two-wheelers, but at this point of time, probably the convergence is very, very minimal.
Right, right. But Mr. Kanwal, the recent stress in the MFI book that we are seeing for the last 6 months, do you think that will push the targets a bit more? I mean, how difficult it would be to achieve 1% and 3% gross and net NPA given the current stress in the microfinance sector overall?
So Manojit, as of September results, we are pretty much within the 3% and the 1%. And to my mind, we will stay between the 3% and 1% for the year, at least. Now that half year is over, we have some visibility of the next half.
Correct, correct.
So I don't think that should be the real issue for us, which is maintaining 3% and 1%, so that we do become eligible to apply for a universal bank.
And Mr. Singh, how serious is this microfinance problem at this point in time? How do you see it? and what kind of bearing it will have on your asset quality?
Yeah. Maybe, we still not have disclosed September number, so I may not be able to talk of, granular details. But yes, I mean, there is a stress and that is visible also. It's not that there is no stress. And once we saw the guardrails given by MFIN, and then every microfinance institution followed those. So we have seen that, wherever there is an over-leveraged customer, we are seeing some stress for sure. So we'll have to see, but on a medium-term basis, this is going to help the industry, help the SFBs and MFIs and even the universal banks who are into JLG space. Because, whatever is a 12%, 13%, whatever the number of customers who are over-leveraged, 4+, I think once that is over, the quality of portfolio should be much, much better for, for years ahead.
So do you have a visibility on when the stress is going to bottom out, or sorry, peak?
Again, as I mentioned, very difficult to predict that way. But my sense is, the 12, 13% customer, which is as an industry data, which is 4+, you should see the moment they are already stressed, overdue, or under DPD. Beyond that, I think it should not be the case. So again, it's very difficult to give a predict 1 month, 2 months, 3 months time. But my sense it should be soon. It should not take much longer time.
Mr. Thomas, what is your take on the recent stress on the MFI sector? How long will it last?
We have already seen for the last 2 quarters, we have started seeing the stress in the MFI portfolio. So, and the reverse trend is also already many of the geographies we have started seeing the reverse trend coming back, because this set of people, they need money, so and they wanted to improve their credit scores. So that is a one major contribution the microfinance institutions, small finance banks all have done for the last 15 years, I would say. After the Andhra crisis, we started sharing data to the credit bureaus and using credit score as a standard for credit appraisal. So now even you go to the remote, rural, tribal village, they are aware about, they don't know the details of the score, but they know that some number is important. I have to keep my credit standards. So that is the biggest contribution of the financial inclusion sector have contributed. So because even many of the middle class people don't have their credit score. But if you go to a village and if you ask a woman, they will speak about credit score.
Right, right. No, the MFI sector and some of the MFIs are in news these days, not for very right reason, because RBI has recently barred 4 NBFC MFIs from extending fresh credit, mainly due to charging higher rates, charging very higher rates and maintaining high margin. Mr. Singh, according to you, what is the right kind of spread that you can charge from MFI loans?
Again, my sense is, around, but even normal banks, universal bank, they always look at around 3 to 3.5% type of margins, I think. I think all should be, in that range.
No, from MFI loans.
Even from MFI loans also, because you have to also factor in the credit cost part. And there's a high operating cost in case of microfinance model. The ticket size is small. And one should mind that it's a doorstep service. What is done in microfinance is doorstep service for a 25,000 rupee loan or 30,000 rupee loan. Sometimes we miss that part. There is an operating cost which is much higher than a normal customer.
Correct.
In fact, you look at a customer who comes to branch, the type of cost he incurs to come to branch and service the loan or give the installment, whereas another person goes to the basti or to the villages. So there is a higher operating cost. And obviously it is unsecured. Whenever we have seen such issues the way it is happening today, I think credit costs also get elevated. So I think these factors are also important. Otherwise, normal thing, I think 3 to 4% margin in any unsecured lending, one should be operating with.
Okay.
Broadly speaking, again, you can't, broadly speaking, the way even other banks operate.
Mr. Kanwal, you have some views on this? How much margin is a good margin?
I think we should take it one level higher.
Okay.
Not worry about microfinance pricing, because that market should decide risk through the cycle losses. There are 10 other factors. I think what we should talk about is what is a good ROA and ROE for a financial institution. So for example, I'm not in microfinance business, but my ROA is 4 or 5%, or my ROA is 40%. Then what would you like to tell me? That is a question. So I think where we should focus is what is an institution's ROA and ROE? Doesn't matter whether it does microfinance, it does housing, it does MSME, it does tractors, irrelevant. Because ultimately what you're trying to say is, if the institution is far more profitable than what an industry average is, then either he is really good or he is charging very high.
Right.
Right?
Right.
So I think we should not worry about MFI pricing. I think we should focus on high ROA, high ROE companies,
Right.
and figure out is the model driving it or is it the pricing. Once we get that answer, I think we are sorted out.
I think that the regulators' discomfort is in that only. You know, some of these institutions who are accused of chasing the customers, you know, pursuing profit, mindless profit. So, but Mr. Babu, what according to you should be a right ROE and ROE for a SFB?
I think approximately around 10% over MCLR would be a broad figure. The regulator themselves, in terms of securitization, have coded that anything MCLR plus 10 will not be eligible for a PSL benefit in terms of a assignment. So which I think what the 10% really means, as Govind said, 6 to 7% in terms of extra operating costs, 3 to 4% in terms of your credit losses on normalized basis, put together is 10. So if MCLR is a reasonable representation of your ROE expectations, so then I think MCLR plus 10 broadly will be a decent agreeable number.
Right. Now, while RBI has given a glide path for them to become universal bank, which gives us a sense the regulator is pretty comfortable with these entities. At the same time, in a recent interaction with SFBs, regulator has raised certain questions, certain cautioning. Let's try to find out what are the small finance bank doing to address those concerned areas. Customer service. I think that the regulator has noted that the grievance redressal mechanism of SFBs are not adequate. What are the things the SFBs can do to improve grievance redressal? Mr. Thomas.
So I think we have adequate systems in place. We have a customer service quality department is there, full team is there. Regular board level committees are there, executive level committees are there. Then there is an internal ombudsman, and all internal ombudsman address contact numbers, external ombudsman, RBI ombudsman numbers address, everything is displayed in our branches. And even customer have the right to escalate to senior levels. I used to get escalations as MD. So there is generally this is practiced by every other bank. So that is there in small finance bank also. So there may be exceptions here and there, but so generally all customer service, customer grievance redressal systems are there in all the bank, all the small finance bank. That's what I believe.
The customer grievances are also there for the universal banks also. That is a fact. But Mr. Singh, do you think there is scope to improve grievance redressal mechanism?
So as Paul mentioned, I think the customer service or the customer grievance cell or the way we look at customer experience part, I think we are well equipped, across in fact. And in fact, I'll say we go one step ahead because the type of customers we deal with, almost all the small finance banks are dealing with the segment of the society, which is less privileged. So I think our systems are even equipped to handle those people. So I think my sense is we are well equipped, and there might have some stray cases. I mean, this can always happen because we're in the interior of the country, where normally people are not able to go. We are in the bastis, we are in the places, the next slides area. In fact, we have a lot of operation in the next slides area.
Next slides area.
Next slides area. So we try to go to actually difficult area. Sometimes there might have some issues. Otherwise, I think as per the process systems and more importantly, the mindset of the people, we are equipped to handle such customers. I think I don't see much challenge in that area.
Governance is another issue with the Reserve Bank of India governor keeps on emphasizing. One regulation which came up last year is that more than one whole-time member in the board of banks. It was recently noted by RBI that many of the SFBs have only one whole-time member, which is MD and CEO. Do you think, Mr. Kanwal, there is scope for improving the governance structure in SFBs?
So first, I would like to make a small point on service. See, SFBs are probably the only banks who actually meet most of their customers physically every month and get money from them. So if there is a service issue, I'm coming to you for money.
Right.
Will you pay me money? Not possible. So I think one thing we should remember, and look at each of us. I think across the board, each of us was meeting 20 to 30 lakh customers every month face to face. Right? And that is at the bottom end of the pyramid or slightly above.
Correct, correct.
So I think that way the job done by small finance banks of meeting these customers, collecting money is very unlikely if service levels or other issues are there. I think scope of improvement is really in my mind two areas. One is more transparency, and I do think we can do more on financial education. Because I think if we spend more time there, then we'll have less challenges. Other than that, I, with my colleagues, can tell you all of us have been ex-bankers, that our call centers or our complaints per thousand, our resolution turnaround times, they would probably meet the best in the banking industry, not small finance banks. So that is a certainty. I think on governance, see, listen, like I said, all of us do come, our boards are independent. We've already appointed 2 directors as the Reserve Bank thought it's best, and I think that adds value for sure. We can always do more, but I don't think so there is an obvious lacking governance issue that we are not addressing. So yes, never say never. Obviously, we can always keep raising the bar on everybody. But like I said, whether it comes to composition of board, competency of boards, processes within the organization, whether it's risk committees or ALCOs, etc. I think they run pretty much because that's a legacy we all bring from the past organization. So we've kind of embedded it here. But I don't think there is an obvious one that at least certainly we are addressing, and I'm sure my colleagues will probably agree with the same.
Mr. Babu, do you agree?
Yeah, I think from a governance, I thought the regulator is extremely happy with the governance standards of SFBs. We tick the box for majority of the things. And on the lighter side of the customer service, at all points of time, our employees inside a bank branch outnumber the number of customers. So there is no way that we can kind of give any service which is less than that. And I think people who have dealt with SFBs will know for sure that the service levels in terms of at least the branch walk-in customers, and apart from what Ajay said, face to face, what challenge we sometimes face is that the regulator may think, how come the customer complaints are so low, which means you are not recording it.
Okay.
Okay. That could be another challenge in terms of, it's looking artificially low, are these guys really recording it? Other than that, across the board, I can speak of any customer who has dealt with any SFB. Probably they're extremely happy about the service that they get, specifically a deposit customer. On the asset customers, yeah, since we meet them in the field, and yeah, but they also kind of do call in if there are any complaints. So on that front, I think we've done a good job. On the governance, I think it will be more useful, which we have an association, we keep discussing, anything which comes on governance. If it is a little more prescriptive, sometimes it makes it a lot more easier.
Right.
So sure to do it. Where there is a letter, we comply certainly with the letter. The difference between doing compliance with the letter and the compliance with the spirit is somewhere probably where there could be cracks.
They are also talking about clear division of responsibility between the board and the management. Do you see it's there in most SFBs?
I won't really comment on it. I think the boards do now, I think across every independent director on the board of a bank knows what the responsibilities are, how onerous and how stringent it has to be. So I think there is a clear division. But where probably with the things have changed, the landscape has changed, is in terms of even in terms of an executive responsibility, the regulator across the world and specifically here are expecting the board to be fully aware rather than just be noting any launches to any compliance related issue. I think it has to improve further. I think I would call it as an intensity in terms of procedural compliance is what is really expected, and I think we all have to really learn to grow up the curve.
One last issue I want to touch upon regarding succession planning. According to the recent norms, an MD and CEO of a bank can continue till 15 years. But in case the MD and CEO is also a promoter, they can continue only up to 12 years. Again, the regulator recently sensitized the SFBs of succession planning. All these gentlemen sitting here are CEOs for 7-8 years. So what is the succession planning that you have initiated? Mr. Babu, why didn't you start this time?
We are going to exchange our jobs. I'm joking. But having said that, listen, we have an average management experience in my managing committee is 27 years. It's public data. So I have very senior guys working for me who have lots of banking experience. And I think there is more than one available. And I think the way SFBs have performed, there's enough foreign people in the market who would not like to be an SFB, but gladly will become the CEO of an SFB. So I don't think so we have a talent issue as we speak or a succession planning concern because we've got very strong people working for us. And I don't see a real challenge of when I do leave, will somebody else be available? Yes, we're grouping them. There's enough and more talent pipeline.
But succession planning is a problem with Indian banks. Apart from one or two, everywhere, whenever a CEO retires, somebody from outside comes in. Isn't that a case?
So listen, I think probably, and I'm not an expert at this, maybe there may be a differentiation between smaller banks and bigger banks.
Okay.
And I suspect that smaller banks maybe find it easier to go for in-house. That's, I don't know, I've never ever thought of it, but that's my first reaction when I heard you say this.
Right. Mr. Singh, any thoughts on succession planning?
No, I think the RBI guidelines that there should be one more whole-time director is certainly going to help us.
Yeah.
In fact, I'm feeling that once my WTD has joined recently, my day-to-day burden has actually come down. So
Okay.
certainly that is going to help us. It's a good on the governance part also. And as Ajay mentioned, I think I'll have at least 20 people who must be more than 20 years experience and across banking, must have come from universal banks only. I'm talking large universal banks. So I think we have a tons of experienced people at the one downs to me, and also we have a whole-time director also. I don't foresee any challenge in overall whenever that stage comes that someone else taking over from me. I don't foresee challenge at all.
Is it a challenge for you, Mr. Thomas?
Not at all. So before commenting on that, I just wanted to add one point on governance. So recently, ISAF, SFB did a ESG rating by SAB approved rating agency. So we got overall 68.1 out of 100. The industry average is 51, and the industry highest is 69. And on governance, we got 75 out of 100.
Right.
So small finance banks have got a highest, it is the third parties with a SEBI framework, it has been done. So that is there. So no ambiguity on that. On succession planning also, we also have appointed a whole-time director, and every year we review that. Our nomination committee review each department-wise. We have the succession. This is a regular exercise we undertake. So I don't see a big challenge on that.
Okay. We have little time left, but we can still take one or two questions from the audience. Is there anyone who want to ask a question? Yes, please, gentlemen. Yeah.
Hi, I hope I'm audible. Yeah. So I have been wondering for the last 2.5 hours since the last discussion was happening with the foreign banks. I'm very curious to understand what we have witnessed in the last 5, 6, 7 years, that a couple of foreign banks have completely wrapped up their retail operations. On the other hand, the NBFCs or the small finance banks, they are breaking the barriers. In your viewpoint, what are the two most prominent points which the small finance banks have cracked, which the foreign banks have been unable to do? One more point, listening to that conversation which was happening with the delegates from the foreign banks, I could somehow sense that there have been complaints with the policies or the regulations, but it's for everyone. So summarizing everything, what are the 2 points that you feel which has been cracked by the Indian small finance banks, but the foreign institutions have been unable to do so? Thank you.
Anyone want to take that? Mr. Kanwal? Yeah.
So this is my view, and I'm sure my colleagues
Sure,
will have.
sir.
See, one is we have decided to serve the underserved, right? And I think for any institution, whether it's a bank or a consumer company, if your market has huge potential, your only simplest first answer is a tick in the box, right? There is potential, there is underserved in financial services, we are going for that segment. And the segment we are going for, foreign banks are not. So I think they've chosen a segment which probably may be overserved. or probably maybe having lower margins purely because overserved, right? So I think that is one issue that we have to remember.
Got it.
That we do serve a segment where there is a lot of potential, which is why the first issue of will we be successful is already answered. Now the question is, will we execute on success, right? And I think the one thing in our favor has been that we are new bank, so no legacy, so very digitized. Helps
Right.
really whether it's analytics, so better modeling, your cost of serve is low, your reach is better. So I think digital has come as a boon to us, and probably starting a bank when digital has become so live, you look at our India stack, you look at UPI, look at eKYC, all the processes have really benefited us a lot. I'm not taking away the regular banking disciplines of whether it's service or risk management. Those are a given. But I think if two distinctiveness, at least that I see, has changed, and I do come from a foreign banks don't address the segment we're addressing. That's number one. And number two, banks which are 40, 50 or 100 years old have leaky systems, silos, difficult to break. We are a new youngster on the block, we are absolutely no baggage. It does help us to then, do things much better and faster.
Mr. Singh, you want to add?
No, I think I just echo what Ajay just mentioned. And just to add that, when we talk of the bottom of the pyramid, I think the DNA of the institution is like that. So I'll say we are meant to serve these people. And there's a large demand, there is large opportunity in the Indian context today. And whatever also happened in the Indian context because of Jam Trinity and because of UPI and those type of things, the type of digital infrastructure we have seen, I think that is also helping us during the last 7-8 years. I can tell that when I go to a rural area, we do 100% digital onboarding. There is no manual intervention at all. In fact, I'm not able to achieve 100% place like Bombay and Delhi, but rural areas is 100%. So I think that is also helping us because the type of trajectory we are seeing in the Indian context, that is another plus for all of us, the timing part.
Thank you, thank you. I think we have run out
you,
of
sir.
time
Thank you.
completely, but thank you so much for listening to us. Thanks to all our panelists as they describe themselves as big banks to small borrowers. On that note, thanks a lot.